For more on the latest interest rate decisions and Europe's economy, I'm joined by Saruhan Hatipoglu. He's the CEO of Beri Consulting and a frequent guest on our show, and I want to wish you a happy 4th. Thanks so much for coming in. Really appreciate it.
Nice to see you.
You know, it's funny, there's in the news business, when something doesn't happen, it's not generally news, but in this case it is, because it wasn't just that nothing really much happened, there's this future guidance. So can you talk to us a little bit about the decisions today, and also the fact that they're kind of opening up the books and saying, hey, this is kind of the path we're taking.
They are doing that. And the reason they're doing that, I think, Mike, is because the Federal Reserve made a decision about a week and a half, 2 weeks ago, saying that they would end their quantitative easing policy. And the European area, the Eurozone especially, was affected by that decision because bond yields started going up. So I don't think it was a surprise what happened today when the ECB announced what they would do. But what was a surprise is the future or forward guidance announcement, which nobody expected from the ECB, pretty much telling what they're going to do before they do it. That's something that the Federal Reserve used to do, and now the ECB has taken over and is doing the same thing.
But there's been some complaints here in the United States that that's one of the toughest things to deal with, is you don't know if the interest rates are going to go up, they're going to go down, and it's trying to read the tea leaves. People would sit around and wait for, well, what's going to be the announcement from the central bank? So what does this do for, because you have clients in Europe, what does this do for the markets?
Well, I was actually on a conference call today about this, and they asked me what it meant. And I gave an example, and I'll give it here too. Let's say, after this interview, I'm going to walk out of the studio, go and do a couple of conference calls, and my work will be done at 10:30. So I'm going to announce that to you, so you know what I'm doing. But you don't know is what I'm doing after 10:30. So the market is still going to start guessing, but they're getting more information. Before this, the ECB used to do only, again, this example is, Mike, I'm walking out of the studio, I'm going to have a couple of conference calls, I have some work to do. So I'm not telling you when the work will be done. I'm not telling you when I'm going home. So the market would be more worried or concerned as to what would happen. So what the ECB did today was a good thing. They said, look, we're going to tell you what we're going to do. We're not going to tell you everything, but we're going to tell you what we're going to do at certain levels of policy making, and you could just guess where the next rate cut or the next decision will be. And I think that was a good decision that they made.
Telegraphing, though, if I'm in business, is a really good thing, because if the interest rates are going to stay low, I may take out a big loan. But if I don't know if the interest rates are going to go up, so it does have an impact on business, doesn't it?
It does, especially nowadays when the entire region is recession. And let's be honest about it, the Eurozone is still they're in recession, despite good numbers for their Purchasing Managers Index. There's some good consumer confidence, business confidence numbers coming in, but the region is still in recession. So Draghi needed something like this, that adopted the Federal Reserve way of telling the market what they're going to do before they do it.
Okay, we've got a new guy in Carney. He's kind of come out and kind of set the agenda. How does he differ from his predecessor?
Actually, he has a tough job to do. The UK is going to be following the ECB to a certain extent, because there are a lot of political problems with them right now as well. But the UK has economic problems. They cannot take policy measures that are completely different or radically different than the ECB at this point. So he has a tough job to do. Our clients are asking us what he's going to do next. I don't think he knows that. He's watching it, and he's going to decide what the Bank of England will do based on ECB, and we're waiting.
A lot of folks on this day here in the United States are in shorts, and they're and walking around and barbecuing. You've been dressed like this all day long. You've got a lot of clients in Europe, but there has to be some concern, and I want to get your thoughts, having talked to them today. You've got a volatility in Portugal. They're seeing what's going on in Cairo. There's been disturbances in Turkey. There's so much going on, and we've talked about the EU. What is their sense as you talk to them today about the volatility of everything out there?
They're absolutely worried. I'll be honest with you. They're worried because of the uncertainty that's out there. Now, we're talking about the economics part of it, which they've been worried about for a year and a half. But that's kind of becoming more certain now. There's going to be problems. They know that. But the governments and the central banks are taking measures to rectify the situation. The political changes, however, what we're seeing in Egypt, what we've seen in Portugal, though we got word that the Portugal crisis temporarily has been resolved, the coalition governments agreed to stay together, so that's good news. But what we've seen in Egypt, what we have seen in Turkey 2 weeks ago, there are signs that the markets will be jittery, because there are a lot of changes that are taking place that the governments have not estimated it. They haven't forecast.
Right.
They haven't seen these coming. So investors are really worried about, especially in that part of the world.
Well, thank you so much for coming in on the holiday.
Absolutely.
Certainly appreciate it. Always great to see you.
Great to see you too.